Took us like 30 minutes. It's not too bad.
Yeah, need a minute. It's uploading from my live. We're getting there. And we are live. All right.
Check out my mug.
I don't need Google. My girlfriend knows everything. I love it. That is fantastic.
How's it going?
Really, really well. Staying at home, having quality time with the family. So it's, pretty good. Cannot complain.
Yeah, same over here. I mean, I'm actually really enjoying this quarantine. I've been forced online, right? So I'm having to use things like Zoom, for example, having to use Twitch to broadcast some of my meetings, and it's actually worked out pretty well. I am, no complaints.
That is great. So we're here today with Mario Rodriguez, and he's from Certified Home Loans, a senior loan originator, and just a fantastic resource and very knowledgeable about the market. And as you guys know, Marisa Jubis Kruss, and I'm a real estate broker associate, been around for a long time. And so I've seen the ups and downs of the markets, and it's easy to get scared when you don't know what's going on. So we wanted to take some time to share with you what's going on in the market and what's real information and, what is just fear that gets in the way of you finding a home, and if that's where you are right now, that you need to find a home. So we're gonna shed some light, hopefully, get some information out to you and answer the main questions that we've been getting from the people we've been working with.
I can say, Marisa, thank you for the nice intro, by the way. The main question we're getting is, how's the market, right? I'm sure you get that at least 15 to 20 times a day. So yeah. Let me ask you, how's the market?
It depends. Why are you asking?
Right. So I've been in the industry since 2006, right? So when I started, 2 years later, we literally went into the worst real estate market in the history, I think, of the United States. It was terrible timing for me to start in the mortgage and real estate market, right? But I learned a lot. And one of the things in retrospect, right, when I look back now, is that when that market crashed, real estate was in the center of it all, right? It was the housing market that crashed. And I'm just not seeing that now, right? It's not a lack of demand. It's not a lack of, banks not lending. It isn't, foreclosures or short sales. Our clients didn't lose 20, 30% in their home values this past week, right? So, when we get asked, how's the market, it obviously depends, what you're in the market for, but overall, it's nothing it shouldn't be scary, is really what I want to get across today. It's not, we're not seeing the 2007, 2008 crash that, we went through. So what do you think?
So true. Absolutely. In fact, I wanted to share my screen. Let me know if you can see this that I'm going to show you.
Yep.
Can you see it? Okay, great. So actually what you were talking about was the housing and mortgage crash. Can you see that?
Yeah.
Visual? Okay, great. So it specifically was a housing and mortgage crash. And that's why we saw this reduction in the home values. But people, if you remember back to 9/11, what economists are now comparing what's going on now with kind of the reaction to 9/11. This is, a chief economist commenting that 9/11 has in common with what's happening today is that this shock has also generated fear and anxiety, kind of paralyzed people, which is one reaction when we're scared. So people avoided crowds because they believed another terrorist attack was coming. And they're acting similarly to how many people are acting today to avoid getting sick. So the same parts of the economy were affected airlines, leisure, hospitality, restaurants, entertainment. It is a similar response. I want to show you, it was the .com and 9/11, crash, if you want to explain that. And let's see what happened there. The S&P correction was very strong, but look at the housing market.
Yeah.
And it went up. And in fact, so one of the things that people say, oh, but I don't want to make a move right now because we're going into a recession. And it's important to know that even if it's a recession, it doesn't equal a housing crisis. I think people too much are remembering what happened in 2008, as you mentioned. And one of the things I found this to be really interesting from Goldman Sachs, that yes, we are having a slowdown right now, but instead of this being kind of a U curve, this is a V curve that we expect strong gains to come out of this and into 2021.
Yeah, 100%. I couldn't agree more. Right. So it's not a consumer, a lack of consumer or anything like that. It's not, it's not like, and I go back to the banks, right? It's not a bank problem. The banks are actually very healthy in this environment. Their balance sheets look great. They're still lending money. Interest rates are phenomenal. So I just don't see the market crash as, some of the clients that we come across, some of our investors are just scared, right? And, I try to get the point across. The housing market is not in the middle of this. This is not a housing market crash. This is a very serious virus that people are, they're staying inside. They're not going out shopping, and, understandably so. So again, I couldn't agree more with that. I believe once we either find a vaccine or we get this under control, we are going to hit the ground running. And it's not going to be a U curve, like you said. It's literally going to be a straight up shot.
Absolutely. And I think that when people are, afraid of what could happen to the home market, the housing market during a recession, I think they're only remembering this last one of 2008.
Right.
And yet 2001, 1981, 1980, all of these saw increases in home values. So because exactly what you said, this was related to specifically the housing market and banking to do with mortgages. Whereas this has nothing to do with that.
And since that crash in 2008, there's a lot of regulations and a lot of double checks that the banks have put into place, right? They used to lend money just based on credit. There was no income verification. There was no asset verification, none of that. So the appraisals weren't verified. Whatever report the appraiser turned in, that was accepted as the truth, and close your loan and move on. And a lot of that has changed. Now, in our industry, we have zero contact with the appraiser. It's a third-party company. They go out, they do the appraisal, they turn it in. Whether you close or not, they get paid the same, they move on, right? So it's an uninterested party that's giving you their professional opinion. I think, it's important. The banks are not going under. The banks are actually verifying income. When we've had a few deals together. Whenever you bring a client to us, we verify their pay stubs, W-2s. We double check with the IRS to make sure that what they're showing us is really what they filed with the IRS. And there's been fail safes put in place. There's been checks, and I just don't see the crash happening, right? So yeah, all positive on my end. It's funny enough. I was thinking the other day. We're all quarantined in our home. If owning a home has never been so important.
Right. I really wish I had put that pool in though. Now going to the Venetian pool, I can't really do that. So I'm really regretting not putting in a pool. We'll work on that after we can get out.
So what are you telling the your sellers, your buyers that are concerned about this whole market, this whole coronavirus situation?
Well, one, I'm educating them on how different it is and how we do have support, and how it's really important to know that the Federal Housing Administration, for example, is not going to be here, let me share this with you. They're not going to be foreclosing. This is a complete different situation. This has nothing to do with the mortgage industry, the housing market. So, but the government does understand that people may not be able to pay right now. They're going to help them.
Yeah.
So there is that help, that support. And I found this to be really interesting. And I'm a numbers person in a way, because for me, that tells a story. So I found this to be really interesting. Back in 2008, where there were all these loose, you just said it, how anybody could get a loan and it wasn't very secure. It wasn't they didn't check a lot of things out. Look how much people took out of their home equity. I mean, they just walked away from homes because they were upside down. And look at it now in the last 3 years. Look at the big difference of how much money they've taken out.
It's a healthy market. It's been a healthy increase.
In fact, I think about, many Americans have about 50% equity in their home. So nobody's walking away from a home they have 50% equity in.
Yeah, and some of the, I guess, pushback we get from some clients is that, home prices are back to where they were in 2007, 2008. But the people that are buying those houses now could actually afford to buy those houses. Mm-hmm. Right? It's not like we're lending, $400,000 loan to someone that makes $10 an hour. That doesn't happen in this market, right?
Yeah.
So the people that are buying those homes actually qualify for them. So I just don't see, I can understand why some people are concerned. And listen, on our end, we have some clients that, they've put their home search on hold, understandably so. They're not sure if their jobs are going to lay them off or not. So they've decided to hold on, until they get a little bit more clarity from their employer, and then they can go back into the market and search for a home. And if you are the buyer or the seller that you have job security, nothing's happening in your sector, your employer, the owners already told you there is nothing to worry about. There's no need to fear.
No reason to wait.
Right, there's no need to fear, and the interest rates now are still historically low, and they were up a little bit since the Fed's announced a rate drop, which again I put a couple of videos up explaining how that works, but the rates are still low. There is no reason to sit on the sideline. As a matter of fact, and I'm sure you can vouch for this, there may be some opportunities now where if you go out looking for a home, no one else is looking out for a home.
Exactly.
Or at least less people are. So
for sure. No, for sure. And I want to talk about that because that's really important. I want to share my last little geeky slide because I think that information is so powerful. And so I have these geeky slides because I'm constantly studying, constantly looking at what's happening, because I don't want it to be like, well, I'm just telling you the market is great because I want to make a commission selling you a house. No, because when I have a client, it's a client for life. And I want to really make sure that I'm giving them the best advice possible, like you do. So I want to just share this last little geeky slide, which is really great. It makes me feel really good. The historic norm for how much the mortgage payment is as a percentage of income has been 21.2%. And as of January, it's down to 14.8%, which is great because we are spending, less of our income on a mortgage, which is, helps you feel comfortable about people being able to afford it.
Look, it goes back to verifying income, right? It goes back to verifying that the clients that are buying these properties now could actually afford to buy these properties, right? It's not like 2008 where anyone could just get a loan. So that's one of the factors that I find is very important when looking at what's going to happen in this market. Right. When you're looking forwards, one of the things that what I like to compare it to is, demand versus supply. There's still a lot of demand for housing out there, and the banks are lending money responsibly, but they're lending money. And, once we get this virus under control, there is no lag or wait time, right? The economy, I think, will pick up. I think housing will continue to go on its healthy growth. And again, I don't see any reason for alarm. So.
Absolutely. And Mario, it's interesting because you just asked me, how the market is as far as like, what are people doing now that need to buy a home? I've got some people that, are moving here and they're in a hotel. They need to find a place to live. They're certainly going to be more secure in a home than in a hotel where there's a lot more people coming in and out, and they need to find a home. So what you mentioned, I think was so important, that as long as, if you know that you're in an industry where you're working and you're not afraid of how long this is going to go on, there's no reason to wait. In fact, right now, if someone's got a home for sale, it's not like it's stopped, but a lot less people are out there looking because they don't want to get out of their house. So, realtors like me that are a little bit creative, which is many of us actually, have gone and videotaped the inside of the home. Or if we can't go in because it's occupied, we've had our, the owners videotape the inside of their home, so that really if someone's super, super interested, then we'll take them, we'll look outside, or we'll have them see the videos and they can put in an offer. And the offer, we put in a contingency that the person has to do an internal inspection. And yes, it's a little bit maybe slower. The timeline is maybe 45 days as opposed to 30 for a closing, because I have inspectors still working. They go in with their masks, they go in with gloves, they go in with booties, but they're in there, they can do their job.
Safety first.
Safety first, but they're continuing to do that. The same with appraisers. So it might take a few extra days. We're being extremely careful, but the market definitely is continuing, and the people that need to move. And if you are out there and you want to buy or sell a home and you're willing to be a little creative, you could do really well right now.
Yeah. And in our industry, really we're obviously verifying that, people aren't being laid off. And, if you are laid off, obviously it's not, don't buy a home. It's not the time. Wait, a week or two or so, and then get back in the market, right? Be responsible, in other words. Same thing with, with sellers. If you think you may be laid off, we have a couple of clients that we've pre-qualified recently that they're not sure if their industry is going to lay them off or not. So essentially what we're telling them is, if your industry is solid and your employer has confirmed you won't be laid off, then hey, why wait? This shouldn't be a reason for that. So on our end, I think the only major changes that we've seen are what we call non-QM loans, right? These non-QM loans affect, like, for example, foreign nationals. They affect your business owner that has a lot of income, has a lot of sales, but they also report a lot of losses or deductions on their tax returns, right? So those type of loans that we would use, for example, 12 months of bank statements to qualify them, those loans have stopped, right? Okay. Some jumbo loans have also stopped, so that's a market also to be wary of. It doesn't mean that they will never come back online, right? Like we say, they're open again, but for now they've stopped taking on applications, right? So that's really the only big change that we've seen. And again, it's only a change that's going to be temporary. It's not like these banks are going out of business. Their balance sheets are phenomenal. It's just a matter of they're holding off on funding some of those loans because they want to see what happens out there in the market in the future. Those type of loans they're not sold on the secondary market, right? To get a little bit technical, they're not sold to like Fannie Mae or the FHA or anything like that. They're sold, for example, to hedge funds. So obviously, when the market crashes, that the hedge funds are doing not as much, then obviously those hedge funds will stop buying those type of loans, And because they stopped buying those type of loans, then the banks stopped doing those type of loans.
Sure.
Right. So it's a little bit of a chain reaction there from that side. But again, once the market picks up and there's a little bit more stability, they'll open up again. And then it's just a matter of, that demand from those buyers didn't just go away, right? Those people still want to buy houses. They still want to move. They still want to sell. So,
sure.
And again, that adds to our point from earlier that says that, there is no market crash. It's just the housing market is not in the middle of this crash. This is a health issue. It is not a housing issue.
Absolutely. And I think that the fact that we are now getting support, because at 1 a.m. last night, some relief was approved. So single people are getting a check for $1,200, married couples $2,400, and for every child, I think it's $500. And more, even though that's fantastic, almost more importantly than that, the small businesses are getting loans so that people don't have to get laid off. They're getting loans so that if they don't lay off people, they're going to get loans which will then be forgiven. I don't know all the details about it. I haven't read the document or anything. I don't even know if it's available to read. But basically, we're getting support, we're getting relief. So when it looked like maybe a lot more people were going to be laid off, I think it's not going to be as bad as we had thought.
Yeah, the details I have on that are that essentially the government has committed to funding the SBA loans. So all of these businesses could get access to money. At that point, it becomes a liquidity issue, right? So now they have more money. They don't have to lay off the workers, or they can extend a little bit longer before they lay them off. Or the people that have been laid off, as soon as we open the doors again, they're able to rehire them instantly before having to wait to create a liquidity, stable liquid assets in their account. So, and the details I got about, to your point about waiving those, is that as long as those SBA loans are used for wages or to hire or rehire or to retain employees, they will be forgiven. I don't know to the extent of it yet, but it does have to do with keeping the employees and not just, getting rid of them or laying them off or anything like that. So again, that's a big positive, and even more so, green flag, if you want to reference a red flag there, it's, the government has committed to purchasing an unlimited amount of mortgage-backed securities. That's huge, right? That's not a bank bailout. That is to reassure banks that if you lend, we will buy your loans, right? So that for us was big. That's something that I was looking out for. And, once they announced that, I knew it's just not going to be a market crash. It can't be. Sure, there will be some slowdown because of, there will be some people that are laid off. There will be some unemployment, but it is definitely not a crash.
Right. And thank goodness that, it's horrible that this is occurring at all, but thank goodness that it occurred at a time where we have the facilities to be able to be talking about this through, Zoom, and go live on Facebook and share this with whoever wants to hear it. And, we have most of my documents are signed through .loop or DocuSign. I don't drive over to, someone's house because the price changed and they're going negotiations the way they used to drive back and forth. I mean, many things are done online.
Yeah,
so,
well, right before I got on this call with you, I was doing this same thing with a client of ours that he had a question. He found a property. He went into contract yesterday and he wanted to see what his, different scenarios on payments and so forth. And this actually made it easier for us because I was able to share my screen instantly. He saw what, the difference of 3% down versus 5% down would do for his mortgage payment. And, it was so smooth that he immediately told me, okay, where do I sign, Yeah. And then from there, everything else is digital, And actually Fannie Mae and I think it's Fannie or Freddie Mac, one of the two, they're offering virtual appraisals, right? So the appraiser's not even going to your house right now. They, you do a video walkthrough, take some pictures, upload your pictures, and that's it.
Wow.
So great. There's been adjustments. The market's not, it's not crashing. There's still, the banks are healthy. They're still lending money. So I'm I'm actually excited. I'm learning how to do Zoom calls and share my screen and things like that. Otherwise, I wouldn't have done this.
I've been doing, listing presentations for people that are just really swamped, want to do it, but they're like, Marisa, I just cannot find the time. I've been doing this since I would say like October or November.
Good.
When somebody can't meet. So thank goodness I've done it before, because I had an idea of, what to do or how to do it. But now that's what's happening. That's how we're doing things. So it's a little bit different, but still it feels like I'm right there with you right now.
So how do you see the market in about 3 or 4 months? I mean, we don't have a crystal ball, right? It's not like we can sit here and say.
Right. I don't know how quickly we're going to get back out there, as they say. I guess it depends on what part of the country, and it depends, if people really take care of each other by not getting out there right now, by keeping the distance, by washing your hands. If people really take care of each other, then it'll be sooner rather than later. So I don't know when that is, but as soon as we're back out, as soon as people start getting their jobs back, it's going to be like that V, where, it went down suddenly, it's going to go right back immediately. And in fact, it's going to keep going up there. Now, the thing is, people say, well, I want to put my home on the market, but I don't want to do it right now. I want to wait. Just think how many people that want to sell their home right now are waiting. So when that does come back up, it's going to be a lot in the market at the same time. So if you want to sell a home, I would put it on right now, because people are at home on their computer. They can only watch so many movies. They are homeschooling their children. They're trying to escape to something. And, we have a home search site, and it's search.risemiamigroup.com, where, you can contact Mario through there as well. And you can sit there and look for homes if you're a buyer, and you can, see what's out there. Where people are out there, they're at home, they're stuck, and they're looking for homes. So if you want to sell your home, rather than wait till everybody gets back in the market, put it there now. What's the worst that can happen?
Yeah,
it might
agree.
Sell.
And when it comes to, I can have, for example, a comparable scenario on my end is refinances.
Oh, sure.
We should not wait till the rates come back down or continue to decline to submit your application. So I'm calling all of my friends, all of my past clients, everyone that makes sense for them to qualify. And we're just putting them into application. We're starting to collect the docs. We're getting everything ready so that once the rates do come back down, they're ready. It's not like at that point, everyone's rushing to the banks, and which is what happened 2 or 3 weeks ago, right? The Feds announced a rate cut. Everyone ran to the bank, and actually that drove all of the interest rates up.
Yeah, so
right?
True. Because they had so many applications.
Right, but yeah, I mean, it's an adjustment. I'm loving it. I'm a homebody at heart, so I'm doing a lot of virtual meetings and a lot of screen sharings and things like that. So I love it.
Great. So today we brought you guys the status of the market, so you really understand what's going on. And just because we both felt that there was a lot of fear out there, and it's really not based on anything. Yes, there's things to be scared of as far as, let's wash our hands, let's take care of each other. But as far as the housing market, there's really nothing to fear on this one. And believe me, I'm a nerd. I've looked at all the numbers, and they're very healthy, very, very healthy. So let's stay physically healthy so that we can continue in this healthy market as well. But we're going to be bringing you some fun things. We're going to be bringing you some hacks for working at home. Mario and I have been working at home now, and we've come up with ways to do this better. So we're going to have hacks on how to work from home, while kids are doing school at the same time, and come in and ask you a million questions. What do you do? How to do that? So we're going to come
next week we'll get on here and seminar, but we do kind of like a question Q&A, right?
Yes.
We run the clients through what we look at when we're looking for investing in real estate, right? So we'll look at multiple properties and just kind of put them against each other and see which one makes more sense. And I think that'll bring a lot of insights, right, to our clients that currently own a home and they want to purchase something else. So that's what looking forward to that. Thank you so much, Marisa, for bringing me on here and for staying with me for 40 minutes.